Will there be a recession? And, if so, just how bad will it be for my finances? Those questions are posing a potential threat for Americans after the central bank once more raised rates to battle high expansion, and the most recent GDP report showed that the economy eased back for the second quarter in succession. And yet the work and real estate markets are as yet pressing onward, however they've cooled a little. That has made a ton of contradicting messages. The White House and other government pioneers are saying the economy stays sound. However, a few financial experts say there's a decent opportunity a downturn will happen before long in the event that one hasn't begun as of now. Should there be a recession, here's how it may affect your finances and what steps you can take to protect yourself. Brace for layoffs. Throughout recent years, the pandemic prompted labor deficiency combined with an underlying lack wherein more youthful specialists are supplanting resigning laborers, has provided representatives with a ton of arranging power. Consequently, unemployment and job cuts have been at or near historic lows. We've been in a time of very low cutbacks and a work deficiency. Organizations have been hesitant to relinquish anyone, said Andrew Challenger, Senior VP of worldwide outplacement firm Challenger Dym & Christmas. That is beginning to change, Challenger said. Cutbacks have been ticking up in certain enterprises, for example, contract banking, fintech, development and automobiles. If a recession hits, layoffs are likely to be higher and more widespread. And employers may pull back on hiring. In any case, not every person will be at equivalent gamble. Assuming your job is popular, whether as a forefront laborer, an IT engineer or a high-level leader, odds are good that you will be probably going to find a new line of work, keep a task and even see raises and rewards en route. Buying and selling a home will be different. The real estate market isn't probably going to be as hard hit by a downturn as it was in, say, the 2007-2009 extraordinary downturn, which was brought about by a lodging and Reddit crisis. That doesn't mean the market will not be impacted by any stretch of the imagination, however, particularly assuming cutbacks get, said Mike Fratantoni, boss financial specialist of the Mortgage Bankers Association. Yet, following 2 years of twofold digit value development and wild offering wars, the home deals are gradually beginning to return to a more ordinary speed thanks to increasing home loan rates, which make homes more expensive for purchasers. Ways to buffer yourself now. While you can't control the economic cycle, you can take some steps to mitigate the potential negative effects a recession might have on you. Secure your emergency cash. For one-worker families, California-based insured monetary organizer Jamie Lima of Woodson Abundance the executive suggests having a year of everyday costs close by in the event that you lose your employment. For dual-earner households he recommends 6 months, since it's less likely both earners will be laid off. If you don't have that much now, cut out some non-essential expenses and add the money you would have spent to the kitty. What's more, in the event that you own your home, consider getting a home value credit extension before rates rise once more, since it can assist with enhancing your crisis saves insofar as you can oppose tapping it for whatever else, Lima said. Stress test your financial plan. Should there be a recession, you might emerge from it solid. In any case, you can't expect to be that ahead of time. What you can do is sort out what assets you need to deal with the worst situation imaginable, for example, employment misfortune or disease, Lima said. If you have no work for a year, what does that look like? What are your contingency plans? Now is the time to think about what do I do, he said.